But it's Alex. Today we're going to go over the daily trading plan. You can see the market's down about 3 points only. And so you don't know what to make, right? What's probably going to happen today? You're thinking, should I buy the dip? Should I short the tops? What should I do, Alex? I'm not sure what my game plan is going into today. And that's exactly why we do videos like this, guys. So if you like daily trading plans, you like knowing what's going on in the market, make sure you subscribe. Let's get into it right now. Okay, so S&P 500, like I said, only down 2 points in about 8 minutes. It's 7:22 for me, so 8:22 right now. In about 8 minutes, guys, we're about to have the jobs report. Okay, and by the way, I'm tracking for bearish continuation as the most probable move today in the market. So that was one of the main points I wanted to make at the beginning of the video. So, before I'm right, before the market tanks out and gets fucked today, I just want to make my call today. I want to make it clear. Okay, so now that we've got that out of the way, all right, before the market starts dropping here today, which is the most likely outcome, I'd say 70-75% chance of that. Okay, so going into now our macro perspective, going into this jobs report, which is now about to release in 2 minutes. Okay, so you see gold is getting fucked. All right, what does that mean? Well, first let's check the dollar. Okay, so a strong jobs report is obviously going to mean stronger dollar. Strong economy, stronger dollar. So you can see dollars running up into that jobs report pretty much. And so you're thinking, Alex, why is this important? You're like, maybe, hey, you're thinking, Alex, if it's running up into the jobs report, which is now hit, guys, we're 9 minutes past it, and you're thinking, doesn't that mean that the momentum is going to fade? It's going to die out? Usually if you run up into something, you're unlikely to be able to sustain those gains. Well, not necessarily, guys. What it takes is a little bit of determination and a little bit of time to just look at the chart. It's very simple. Okay, you've got very limited downside potential in the dollar as it's basically at its all-time lows, not all-time lows, but its lows here on the chart since September. So September lows, it's basically there. So you got tons of upside in the dollar, very limited downside in the dollar. You see what I'm saying? And so that's why we know that, yeah, it's running up, but it's got so much more upside, right? This is not the top of the dollar. You see what I'm saying? So yeah, this is why a run up here is actually sustainable, unlike, let's say, a run up in some, overpriced stock going into earnings. You see what I'm saying? So this is why I'm confident to put out, a video of me already saying that we're tracking for the most probable move to be bearish continuation, because we see either way, if the job claims is good or bad, right, it still leads to downward move in the market. Why? Because even if the jobless claims is great, right, let's see right here, let's go back to the dollar chart. It's great. Okay, the dollar might go down like a little bit, but it's not even likely to go down because it's already smashed, it's already hammered, it's got a lot of upside with little downside. You see what I'm saying? So based on where the dollar is positioned, it doesn't matter to us what exactly that jobs report is. Now I'll tell you now what it is. Jobless claims rise to 742,000, the first increase in 5 weeks. Okay, so that's already a bad jobless claim report today. Okay, so we knew that whether it was good or it was bad, it was going to act as a negative catalyst most likely today, and so far that's what you're seeing. Okay, so assuming everything plays out as we envisioned today, bearish continuation, that would just be great evidence of using the charts instead of news. Okay, so everybody who's sitting here this morning thinking, oh my god, I wonder what the jobless claims is going to be. Is it going to rise? Is it going to go down? Guys, it's not really important. What matters is what's reflected and what's being shown on the charts. You got to react what's going on the charts, and that's how you get the confidence you need with the trades. Okay, so it's never, you should almost never be swayed by news. So you shouldn't be in a trade and think, oh, but what if they release bad news? I better get out of my calls, right? It should never be that. It should be, what is the chart telling you? And you react off of that. So should be a great example today. Of course, if we're accurate, as I predict, we have a very good chance of being accurate based on the charts, right? So you'll see that. But what's going to go up today? Well, even if the market falls today, guys, got somewhat of a weird prediction here. The Tesla's going up no matter what. Now, am I buying into the hype? Alex, are you buying into the hype? I thought you look at the charts. Well, okay, there's a couple things here you want to know of Tesla. Okay, so we actually had 200,000 volume on the 500 strike calls yesterday. Okay, so I don't know if you're looking at the option chain yesterday, but in relation to the other strikes, the other strikes had like 10,000, maybe 15,000, and then you just see this crazy call interest in the 500 strike. It was 200K plus, right? So we know that institutions bought the hell out of that strike, and so, they're the people who move the markets. Those are the people who can actually move Tesla, not silly old Joe over here who's got, 4 shares of Tesla for $2,000 in total. That's not going to move the market. You see what I'm saying? So they got a 5,000 call or if they got 200,000 volume contracts on the 500 calls, you better believe they're going to push that up today. So depending on where we open today, we'll see if you can have a chance at getting into that trade or not. But yeah, that's basically the first target is 500 on Tesla. After that, the all-time high is 540. I mean, what is it? Yeah, 534. Okay, so then the next target is about 520 actually, and you'll see it's all reflected in the option chain. Now, you don't always go off the option chain, but when you have lots of catalysts here for Tesla, for example, the hype. Second, you have these analyst ratings and these crazy, ridiculous, stupid fucking price targets of 540, 600, 4,000. Now, guys, we're not worried about what Tesla's going to do in 3 fucking years, 5 years, 10 years here, guys. We're day traders, so we're trying to play it today. And our first target's 500, our second target's 520, and then after that, you better be fucking careful because this thing can dump off at an instant. Okay, so that's what you need to know about Tesla going into today. And guys, I think I'm gonna hold off on our trades for the day. Okay, so besides my basically, I guess you can call it a prediction or whatever for bearish continuation today, the last thing I wanted to help you with is gauging this hype on Tesla, right? How do you know? How do you not get fucked to the call side or the short side on this thing? Well, keep an eye on the institutional buying of the options, right? If we get to 500 and they decide they're going to dump off, well, guess what? When institutions are going to dump off, they're going to buy a shit ton of puts as well. So not only are they going to sell their shares, they're going to fucking, leverage that and buy some options as well. Okay, so if you see we hit 500 and all of a sudden there's a shit ton of puts instead of calls, okay, well now you know it's likely going to drop off. Okay, if it's the inverse, right? We hit 500, there's still a ton of calls on the table, and then they're still likely bullish. Okay, if we hit 520, which is the next target, all of a sudden the calls disappear, there's shit ton of puts. Okay, then that shift changes. You see what I'm saying? So that's a super easy way that you can kind of get a good gauge without even having to look at the chart necessarily, just looking at the price and the option chain, right? But obviously you want to look at the chart. But I'm just giving you a very easy way or one way to kind of help you track the momentum of this thing. So that's a super good tip I can give you, and I hope that helps. Okay, so no real trading plan for you guys today. I'm kind of helping you understand how to gauge momentum here with Tesla today, and then obviously giving you my opinion on what's most likely to happen here today in the S&P 500 bearish continuation. Okay, so all right, so guys, that's the plan for the day. I don't want to sound too bold. I don't want to sound too a prediction wizard here or anything, but like I said, you kind of have my overall opinion. Like I said, I'm trying to stay away from being so bold about things because I don't want to lead people on too much. Okay, because I know an opinion at 8 in the morning can easily change by the time it's 12 in the afternoon. Scenarios change, things change throughout the day, and that's why I'm really trying to cut back on specific bold things because I just don't want to lead people on in any way. Okay, all right, but anyways, guys, that's kind of my update for the day. It's kind of also my update on how I feel about what we're doing here. Like I said, I'm kind of stuck whether being neutral, whether being bold and being real and telling you guys exactly what I think or whatnot. So, for that reason, probably going to be a little bit of less videos as I regroup and try to figure out what exactly am I doing here with the channel, with what we're actually putting out here. Okay, so yeah, I don't know, guys. That's the plan for today. Take use of it. Hopefully this all makes sense. Hopefully walked away learning a few things, right? Like kind of how to gauge the Tesla momentum, kind of how we're seeing that the overall shift is downwards here in the market. And guys, have a great day. Drop a like if you haven't. Make sure you're subscribed if you're not, and we'll see you guys on the next video.